Hey, what's up, my friends? So in today's training, I want to share with you 4 simple swing trading strategies, right, that you can use to profit in bull and bear market. So let's get started with number 1. This is what we call the break and retest strategy. So this strategy is used, right, when the price breaks out and you don't want to chase the market. So how do you capture, right, that burst of momentum, right, without chasing the market? So you look something like this, right? Let's say market's in a range. Up, down, breakout. And you don't want to buy at this highs. You don't want to chase the market. So how do you trade this setup? So what you want to do is to wait for the price to come back lower to retest this previous resistance, which could become support. So you're looking for a bullish price rejection, something like a hammer, a bullish engulfing pattern, right, to signal, right, that the buyers are stepping in and about to push the price higher. So it's something like this, right? Let's say this is a hammer form, right? When this happens at this previous resistance which could become support, that's a sign that the buyers are stepping in, and you can use it to time your entry to go long and to catch this next burst of momentum towards the upside. So this is the first setup, the break and retest. Second one is this, right? The trend continuation false break. So this is for you, right? If you want to achieve, right, a risk to reward ratio of 1 to 1.5 or more. So this is also used, right, when the market is trending. So as you know, market is trending up higher like this in an uptrend. So where do you enter this trend? So what you can do is to look for a trend continuation. Look for the market to retest this previous swing high in this trending market condition. And what you're looking for is for the price to make a false break. In other words, a false breakdown. So this is the lows. Price trades below this low and then quickly reverse up higher, closing back above the low. So we call this a false breakdown, a false breakout in the direction of the trend. So this is why it's a trend continuation trade. So what you can do again when that happens, so you can again look to enter on the next candle open or use a buy limit order if you're a bit of a cheapskate like me, right? Entering somewhere about here, your stops can go 1 ATR below this low, a distance below it somewhere about here. Then your possible target could be just before this swing high. So when you kind of like assess your risk to reward ratio, let's say this is your entry, then let's say this is your stop loss, and let's say this is your target, right? Often, right, you should be able to find at least a potential 1 to 1.5 risk reward ratio. Let's call this your reward, right? So if you assess, right, this is the amount that you're risking, okay, and this is your potential reward. Usually you should be able to get at least a 1 to 1.5, and if you go with a trailing stop loss, you could even get a 1 to 2, 1 to 3 risk reward ratio on this trade. That's possible as well. So that's the second setup for you, the trend continuation false break. The third setup that I want to share with you is a counter trend setup. This is for you if you're the type of trader that wants to take a contrarian approach. You don't want to trade with the herd, but at the same time you want to minimize your risk, right, in case you're wrong. So how do you take this counter trend setup? So pretty simple. Counter trend setup usually occurs, right, when the market is trending and you are trading against the direction of the trend. So let's say something like this. Okay, market is trending up higher, and at this point, right, when the market is trending higher, as a contrarian trader, as a counter trend trader, you don't want to be selling at this point over here because the price is kind of like in no man's land. It could continue to go up higher another 10, 20, 30%. So what you want to do instead is to wait for the market to make a dip, a pullback, okay? When that happens and when it starts to go up again, pay attention to this reference point. Pay attention to this swing high, because as a counter trend trader, you want to see if the price can fail at the highs. Because if it fails at the highs, right, it tells you that there is possibly selling pressure coming in, right? And traders who are long buying the breakout, if they get it wrong, right, the price could quickly make a pullback, right, towards the downside. So what you're looking for is for the price to fail at this swing high. So something like, let's say, a shooting star pattern like this, for it to fail like this. Okay, so when it fails, right, okay, it doesn't mean that the entire trend is going to reverse. No, that's not what I'm saying. But in the short term, right, there could be selling pressure and this market could hit down lower, right, from then on. I won't say it's unlikely the entire trend will reverse, but you can expect some short-term selling, short-term weakness, and as a counter-trend trader, you can catch a small piece of the move, right, towards the downside. So that's kind of like how you can adopt a counter-trend approach. Again, bear in mind, right, we are not trying to time this and say this is the end of the trend. No, that usually would be a very costly thing to do, because more often than not, the trend is likely to continue higher. As a counter trend trader, your goal here is just to capture that one small piece of the move, right, against the direction of the trend. So this way is one way to do it with low risk, because you can use this reference point, right, to set your stop loss. Your stop loss can now just go, let's say, a distance above this high, somewhere about here, and then try to capture that small downside move. And finally, range market. This is for you if you want to buy low and sell high. This is pretty straightforward. So let me illustrate. So let's say the market is in a range between this high and then this low. So as a trader, you're looking to kind of like, buy low and sell high. So let's say the market comes down lower, buy low, comes up, sell high. So to be honest, right, range market, there are two things I want you to pay attention to. Number one, right? When I illustrate, it looks simple. Oh yeah, rayner, you just come down lower, buy low, market goes up, sell high, straightforward. But in the reality of trading, right, what often happens is that the market comes down lower, it goes up higher, comes back down lower, and then maybe finally it reaches your target. So you can see that there's a lot of back and forth movement, right, in this type of range market condition. So you got to manage your expectations that the market might not move to your target that smoothly in one swing. It might, go up and down against you, test your emotions before finally reaching your target, or even possibly hitting you and stopping you out for a loss. So that's possible as well. The second thing that I want to share with you when it comes to range trading is because range trading is so common, but there's a lot of nuances, right, that are not talked about. And the second one to talk about is basically, right, talking about trading, right, from the best area of value in the range. So let me explain. So let's say market goes up, comes down, and let's say trader wanting to sell at the highs of this range. Sometimes the market might come near the highs of this range and then make you think, it's not going any higher. It's about to reverse down lower. So what traders will do is that they are too anxious, fear of missing out. They quickly sell this market, short this market because they don't want to miss the down move lower. And what happens is that instead of the market heading down lower, they got short here and the market squeezed them up higher, going above the highs of the range before it comes back down lower. So you can see that if you are too early trading in a range market condition, you could get squeezed out of your trade, right, before the market moves in your direction. So if you trade range markets, please bear in mind that these are the two things that I want you to take note of. So if you've enjoyed this training video, smash the thumbs up button. If not, then hit subscribe. And by the way, if you want to learn more about swing trading, price action trading strategies, then grab a copy of this book called Price Action Trading Secrets. It's about a 140-page color trading book, right, where you'll discover price action trading strategies that you can use to profit in the financial markets. I'll put the link somewhere below this video so you can get a copy of it. With that said, I wish you good luck, good trading. I will talk to you soon.